Welcome back, traders and investors. We have Nic Chahine creating income with option spreads. Nick, how are you going to create some income today?
Well, today and this week, I'm taking it carefully. In other words, I'm not getting married to any of the trades I'm doing. I'm trying to, so to say, stick and move because last week we were doing some headline trading, and that is pretty dangerous at times. So any profits I get a chance to book, I'm booking.
What do you mean by headline trading?
The Russian situation. For some reason Obama keeps going out and trying to rhetoric the whole thing and trying to shame Russia into not doing whatever it's doing, even though in my personal opinion, we probably have no business doing it anyway. So they were trying to inflame the situation, but it looks like it's dying down now. Everybody's sitting down and talking, and no buildup of troop headlines like on Friday. This brings me to exactly Friday. That will answer your question, really. Friday afternoon. Friday morning, we had a nice run-up, and then we had a fade. And CNBC was saying the fade is just the same as the whole week. Wrong. If you look at exactly what happened within the day, the fade started without the yen spike. We've been trading inversely, tick for tick. So yen spikes up, the markets go down, the 10-year goes down. You can chart it, and it's tick for tick until Friday afternoon. We slid down going into the weekend because people were booking profits from all week. They haven't had the chance, bulls, to book profits, and they had an up morning, so they booked some profits, including me. So we booked some profits, so we slid down a little bit, but the yen didn't spike accordingly. So that was different. But then the headline came out from CNBC, buildup of troops along the lines of Russian troops along the Ukraine borders. But I read the headlines on some other newspapers that are not from the United States, and the headline reads, Russia is returning arms to Ukraine that they left behind in Crimea. So who's telling the truth? I don't know.
We never know when it comes to those political situations. Before we move on to what you're looking at this week, and I know I popped in the chat room last week. You had put on that Google trade, and you had shorted. I believe, what was it, the 1,100 put? It was something
No. It was 1,000.
1,000.
And I covered it for even money because it went nowhere. So actually a little less than even just the cost of the trade, and it wasn't a big anyway. So it was just I wanted to do something, so I threw it out there. But I haven't traded Google since then, just because, which brings me to another note I wanted to make today. You guys just mentioned Momos, right? And then you immediately jumped to Google. You said you were typing Google already. So it's being traded as a Momo. I call it as an honorary temporary Momo because it prints money. So why are we trading it like a momentum stock? To me, the momentum stock is... led us up, right? And they rocketed up. And then they're the easiest to bring down. So the bears go after them. Just like, to use the analogy, lions can bring down buffaloes, but if they see a little baby zebra who's limping, they're going to go after that first. Yeah. So they're easiest to bring down. But if the market stabilizes, it gets to a level where it's not so easy. So Google, yes, it's being brought down, but I haven't traded it because I think it's all about the split this week.
Okay, so, yeah, you're right.
What day is the split? You're right. What day is that?
4/4, I think. So the Thursday when the new options come out.
Yeah.
That's probably when you're going to have a couple of tickers, and it's going to be pretty confusing. But it prints money. I mean, you can't break the math. The only way it's got major downside from here is if the markets in general just collapse. So you can't break the math. If it's still going to earn X like it's earning now, it's pretty compelling to take a long shot on it. And if you can't take a long shot on a stock of this quality, then the markets are riskier than we're saying.
Long term, I'm agreeing with you. I've been a big fan of Google for a long time here. I eventually do think Google is going to be the most valuable company in the world. I know Fari's been on there. He's kind of online with me there too. Obviously, like you said, though, short term, these things do all kind of trade together. And I mean, Google obviously has a lot more earnings than some of these other ones do. But what do you think about some of these other Momo stocks? Because we were just looking through a few of them there, and we've had a significant rally in the S&P futures. We're only 6 points off the highs. But if you look, Facebook's 12, 13 $15 off its highs. Tesla really hasn't participated in this recent rally whatsoever. Twitter is still kicking down here, over 25 points off its highs. What's it gonna take to kickstart these stocks, or do you think like they're pausing for another leg down, or are they just pausing, and eventually going to be some bottom pickers come in?
Yeah, well, my take on these momentum stocks, and I'll tell you what I'm doing with them this week. I'm buying call spreads in some of them. You mentioned Tesla earlier today on the show, and last week we spoke about Tesla, and I said it was flagging majorly. Either that, or I chimed in on somebody. I can't remember, I remember
I think
saying,
you were on here. Yep.
Yep, and obviously broke down. We weren't geniuses. It's just the whole market broke down somewhat. But Tesla broke down harder than usual and went down to, I don't know, what was a 203 level or something like that a couple of days ago. But now it's reaching an uptrend, the bottom of an uptrend from a long time ago that I have drawn on the chart. Nothing official. So if, and that's a big if, on Friday, we get a good jobs report and the markets settle down a little bit from their tizzy. It's worth a long shot. I'm not going to pile into it, but I'm going to buy a call spread. I've been nibbling. I did the same thing with LinkedIn. I've been waiting for 180 on LinkedIn to jump in, 175, 180. It almost gave me the chance a few times, and I finally jumped in last week with it. And jumped out a couple of times. So anytime I'm getting 50% of my money at risk, I'm getting out, booking the profit, re-entering.
Right.
So I'm booking profits in it along the way. And so that's how I'm playing the Momos.
What specific contracts are you looking on the Tesla?
April. I want some time.
Okay,
I don't want to be wrong and lose all the premium. Right. So what I do is I buy them to at least have a chance with some time to be right.
Okay.
Not giving you a lot of time here with April. I mean, we're coming up on the first Friday, so basically you would need that move within 2 weeks if you're looking at the Aprils.
Giving yourself more than a few days, though.
I'm not doing the weeklies because the weeklies, if you're wrong one day, boom, 20%, 30% gone of your premium. Then you're forced to act on it immediately. At least on an April contract, I can do a couple of things to offset. I can move it up, down. I can sell some put spreads to finance them. So here's another thing. I can sell the May a lot lower credit put spread to get some money and buy the call spreads with them, kind of doubling up on my long there. So if it's at depressed levels, the credit put spread, which means I take risk if it drops further, is less risky from a lot lower levels than it was, say, a couple of days ago or a couple of weeks ago.
How about Twitter here? I did an article last week that this is kind of a replay of the IPO here. If you didn't get in at that $45 level, basically here's another opportunity. Made a low of the move at I believe it was at the 43 handle, 43.16. If 43.31. If we've popped up here, struggling in the 47s. I mean, is this a chance to re-enter at or near the IPO price? Or is this just too much downward momentum in this?
I'm looking at the chart, and it's just I call it a downward chug, a consistent downward. Some like big guys are selling out of it. I don't know more than they do, and I'm just going to go with the trend. I love the company. I love the product. I love using it. I'm confused as to how people are confused on how to use it, but I never click on the ads. I mean, I never even look on the ads. I don't see how they're making money or how they can make money. So I'm not a fan of the stock, let's put it that way. I'm not a fan of the investment model as it is now. They need to tell me how they're going to monetize some of this usage.
Okay. I think that's been the game with all the social media, is just figuring out the best ways to monetize. Like Facebook's starting to figure it out a little bit, but it's a hard thing to do. The only thing they have a lot of usage, I mean, Facebook, the users are huge. Twitter's really picked up. And you watch anything on TV, and they've always got any advertising. They got the little Twitter thing, follow us on Twitter, follow us on Twitter. It's like free advertising for Twitter everywhere, so you got to give them that. So the only thing is...
And also the break into whatever the most retweeted statement by whatever that show was on TV the other day, but the thing is, they need to make it. I think they're too honest on their metrics. I think that everybody else, like LinkedIn and Facebook, they say 1 billion user or a 500 million user. I think the user, quote unquote, is defined differently than Twitter. I think Twitter is understating how much people use them. That's my opinion. And if they can true it up and start measuring like the other guys, then suddenly people say, whoa, we're in the same league here.
That
Okay.
looks interesting.
Anything looking bearish to you at all?
Yeah, you mentioned a couple of names earlier. You mentioned covered GM. I want to run away from that thing. First of all, I don't like ever to invest in autos just because, 35 cents on the dollar is probably human resources, and that's their major problem since the day one. So I don't want almost a third of my dollar to be a cause of a problem, constant problem. So, and you mentioned that it's head and shoulder-ish. Las Vegas Sands also, I'm looking at it head and shoulder-ish, and potentially it's forming some right shoulder there. And also, if I'm looking at Win, it might have the same thing. Win ran up like mad and then retraced all of it almost like mad. So there's no conviction in that run-up. So what the heck was that run-up was about? So I'll be cautious with these two, especially if the markets don't stabilize. Now, if the markets stabilize this week, meaning the Russia situation is under control somewhat, and the jobs come out as expected and better, then we might continue to chug up, but not run up. So I'm no longer scared of a giant leap up, except for short covering and relief rallies. But I'm less scared of a whoosh down than I was last week, just because of market reactions to headlines of sorts. Now, I want to caution the Crimea situation and Ukraine might resurface, even if Russia doesn't do anything, when it comes time to the official elections in Ukraine somewhere in May. They had a coup, which we don't call it coup here for some reason, but it was a coup. They overthrew the government, threw the guy out and said, you're a criminal, and we said, okay, that's good with us. And they're going to have the official elections in May, and I'm reading some internal struggles there as to who's going to take over.
Wow, so you're really, I mean, as technical as you are in trading your options and stuff, you really keep an eye on the macro situation. It really seems to, it seems like the situation in the mainstream media has kind of died down on this, but this is, you're still just keeping your eye on the wire on this situation.
I can't avoid, Russia is the number 2, I think, supplier of oil and gas and all of that. They supply all of Europe. Germany will never side against Russia because it depends almost solely on on Russia for its power. So, we can't ignore it. There's no way we should ignore it.
And I think it's your time frame too, Nick, that makes you have to, when you're an overnight trader, when you're holding positions overnight and you're doing stuff, for a 1 week or 2 week time frame, you've got to keep an eye on the macros and you've got to keep an eye on the economy. You got to keep an eye on the overall headline risk because you have that overnight. For intraday traders, for somebody that's trading like a day trader, it's not as important because there's rarely stuff that happens in the middle of the day. But overnight risk is something you obviously have to consider. And I still stress, I think that's still the best opportunities is this in this time frame that you're in, Nick, because you go in the ultra short scalping time frame and the high frequency traders just seem to dominate that area. So if you can lengthen that time horizon to where Nick is a little bit, a week or two, it seems to be a lot more opportunity there because there's not as many professional participants in that area. So I think you're in the right time frame, Nick.
Yeah, what I'm doing is, you're absolutely right. I cannot compete with the day traders. I don't have that, second-to-second mojo, so to speak. But every bet I'm taking, say if it's 2 week long bet, 3 week long bet, like April's, I'm covering myself with some hedge on the weekly side. So either that or I make an opposite bet also somewhere else. So everything is hedged. I'm not committing anything one direction because I trust myself with my fundamentals. I just don't trust how the market reacts to whatever is going on overnight.
Okay, just as far as the markets moving up near all-time highs here, you're just looking for a continuation of the trend.
Well, I'm looking at that nothing has changed. I always say to my macro thesis, does anyone believe that the Fed is not behind us still if we need it? I think everybody will say, no, we still believe that the Fed will do whatever it can to keep the markets afloat. That's all I need to know. And, Yellen, her 6 months, quote unquote, I think we should frame it and put it up on the wall somewhere. She should have retracted that because she obviously didn't mean it to me. I was listening to it. I was like, why would you say anything? Ben would not have said that. He would have dodged it. He would have said, it's hard to say, it's data dependent. So the 6 months, like she pulled it out of her pocket. Yeah, she pulled it out of her pocket. So it's like, if you didn't mean it, if it's not a timeline that you guys discussed in the room, why mention it? And nobody else came out and said, yes, we discussed it. Yesterday, I think somebody said, well beyond 2015. So I'm not worried. I just adjusted my mortgage. I got my letter yesterday, and I'm down to 275. So I'm happy. I've got an adjustable mortgage. The rates are not going anywhere anytime voluntarily.
Okay, to close things out, we just Joshua P. here, looking at this Yelp chart here. Selling, it's seemed to slow down a little bit, trying to put a bottom in here. Back at the lows that you had at the beginning of the year. Is this are you looking for something for this to turn, or just you're just trying to pick a bottom at this level?
I have not traded Yelp, and I'm looking at when I look at the chart, it's at the bottom of a if you trend the last 6 months or so, it's kind of like lost whatever.
A little bit of momentum, yeah.
Right, a lot of momentum recently, but it's kind of reminding me of Netflix. It's like somebody big doing something, and when somebody big is doing something, I ask myself why. This is just too much bearishness on it consistently. It's not like in the last few days when the market stumbled. It's been dropping from early March. So like the 7th, I think it started with a big red candle and a bigger candle the next day, a third big candle, and then tried to bounce, and then a huge red candle. So it's like red, green, red, green, and the whole reds until a couple of candles ago. So I need some more time before I jump in. I'm not going to catch that knife. There are better knives to catch. The Google knife is a lot easier to catch, much bigger handle. This one is like a 2-inch handle and a 10-inch blade.
Okay, I know I said one more, but John Spangler's hopping in here with a fuel cell and just popping up. I know this is a low-price stock, probably doesn't have any interest into you, but boy, it's forming a base here, or is you just think it's just accumulation, just buyers and sellers and just getting ready to take out those lows? You got any feel on that one? Fuel cell?
No, I mean, that's just too small. I mean, at this point, it's like an option itself,
Okay.
Yeah.
So if one wants to take a shot on the upside for it, fine. I mean, that spike early March was insane. And if I had any money in that, I would have cashed out and ran.
Yeah.
Here, if I wanted to play a lottery ticket, maybe yes. But I have no inside information on the whole industry itself. I'm not a believer that this is going to be the be-all, end-all. It's been in front of us for decades, if not more, the technology, and I don't know more than that. So I would need to do a lot of homework to believe long-term in something like that. Maybe it's something I buy and I give my son. He's 12, so...
Okay. All right, Nick, if you could hop in the chat room here and finish up with any questions, I'd appreciate it. Thanks for coming on as usual, and we'll have you on again next week.
Absolutely. I love it. Thanks for the time, guys.
Okay.
Thanks, Nick.